Deal Surgeons, Elite Masterminds, what's going on? This is Diamond Life. So I'm doing a win review on Litecoin. So if you understand crypto, Litecoin, Bitcoin, Ethereum, the cryptos move on a weekend. So to me, if you're not trading crypto on a weekend, not to really make money with it, because you may only be focusing on Forex or indices, but still, I think people still should do it because you can understand and practice the structure over the weekends, right? But you out there partying and drinking and doing all that, but you think you're going to really get this, and you don't have to put in the work. So this is just a hack. Trade the crypto on the weekend to practice the structure, not necessarily to, you can do it on demo, not necessarily to make money, but you can practice the structure, because if you understand it, it's all the same shit, right? Structure is structure. It's not like what I'm about to show you right now does not work on what you're using. So this is the win review. So I took a short. So why did I do it? Was it gambling? Was it praying? Was it luck? Let's see. If you understand ICT, he teaches something about every time you look at the chart, you should be asking yourself, are we working off of a swing high or a swing low? Okay. He has so many things that he teaches, but I asked myself, I'm like, okay, because first I went long, and I'll show you on the annotations when we go down to the 5-minute chart. So this is something that you're going to see called switching gears, which he talks about. Don't mean you don't know how to trade. Don't mean you know what you're talking about. Sometimes you see the structure wrong, but that's okay because you can switch gears like I did. So here I asked myself, okay, I was like, okay, are we working off of a swing high, swing low? Okay, so if you understand swing high and swing lows, you have to count the candles. So you have a high, and then you have a low, which is this low right here, that high right there, and then you have a lower high on the left and a lower high on the right. Okay, then you have the upper candle, the top candle here. I just imagine it like a pitchfork, like if you imagine a devil with the pitchfork. So you have to ask yourself, are we working off of a swing high or a swing low? So here I was like, we're working off of a swing high. Okay. So then what you have to do is you have to look at the candle. You have to look at the low right here. Okay, I seen this from ICT like a year and a half ago, maybe. Well, I didn't know about him a year and a half ago, but maybe like a year ago. And so what you have to do is you have to count the candles. So this is number one, this is number two, this is number three. And so what happens is we don't trade until we see this low right here taken. This is the trigger. When I turn on my annotations, you'll see this is going to be labeled the trigger. Okay, this is the 1 hour chart. So once this low is taken, ICT says if this low is taken, we don't do anything until this low is taken right here. Okay. When this low is taken, then you're on alert. So basically you can't do anything yet until this whole candle closes. So what I did was I saw it and I was like, okay, well, I said, we're working off of a swing high, and this low right here was taken. So, and then you have to look at the way it closes. It's just not when it takes this low, because it could take this low and then close up here on the bullish candle. And if you go short, you're going to be wrong because it's going to take out this high, or at least come up here do a rejection block. So I had to look at the closing. I had to see not only that it takes this low, it has to close bullish. Okay. And I want to really see it past 75% or 50% of this wick. Okay. 50% of this wick. I'm talking about this wick right here. 50% is about right here. So you see it closed here, right? So this was game time. I'm like, well, this shit going lower. So what's the target? The target was down here, this wick low. Because the way ICT teaches is that if you see a swing high, which is what this is here, 1, 2, 3, you wait for the fourth candle. He really teaches this on the daily chart, but if you understand the structure, it's fractal. This is on a 1 hour chart, but price action is fractal. But he teaches this on a daily chart so you can pick up more pips, make more money, right? So what I did was I waited. I said, okay, well, I'm gonna wait till this candle close to see how it closes. It just can't take the low. This is a requirement, but you have to have step one and step two. Step one is it has to take the low. Step two, it has to close bearishly. And I want to see it close below 50% of this wick. Okay, this wick right here. So it closed. I'm like, okay, well, shit, the price has to come down here. Okay, it has to come down here. So now let me turn on the annotations, and I'll go down to the 5-minute chart, and I'll show you what happened. So hold on. Lord, let me turn on the annotations. Sorry. All right, so now I'm showing the drawings, and now we're about to go down to the 5-minute chart. All right, so now I have this standard deviation thing over here because this is I lined up. This is the wick right here. Okay, so this is I have the standard deviation based on the wick that I marked up. Let me make sure I got the lock in. Is this thing locked? Okay. So hold on. Damn, price dropping a whole lot lower. Yeah, damn. I should have stayed in for a short, but that would have been gambling because I didn't know what price was going. I had a sense it was going down to the opening price. But let me explain this move here. So first, remember, I had to switch gears. Oh man, this would have been better to show them because you can see the actual executions. So I just have to point out what I did. Okay, so here's the swing trigger right here. Okay, this is a swing trigger. So this is my color for the 1 hour chart is this tan color. So remember, this is a trigger right here. So what happened is I went ahead and got short here. When price was going up right here, I went ahead and got short here because remember, I knew price had to come down here and take this low. Okay, it had to. It wasn't gambling. It wasn't guessing. It was looking at the structure. I just showed it to you on the 1 hour chart. So I went ahead and got short right here. I was scary because I'm like, damn, well, what if price keep coming up here? I mean, I was willing to put up with that because I was like, well, price could come back up here to this bearish breaker. This is a bearish breaker right here on the 1 hour chart. Let me double click on this to make sure the text. So you always have to label this stuff. If you're not labeling your drawings, I still see people that I train with not labeling their drawings. I'm like, it's crazy as hell to me, but whatever. I told you what to do. So, so yeah, this is a, I thought it would come back up here, but I was okay with that. So I went in short, like right here. And then, no, I'm sorry. I went in short here on this candle here, not this one. I went in short here. I'm doing this on a different device. It's not showing the executions, but if I apologize. But right here, I went short because ICT teaches if you're going short, you need to go short on up close candles. You don't do it on down close candles because that's chasing price. So I went short on this candle here. Now, and then price shot down to consequent encroachment. Okay. Now, if you see here on my notes, because every time you get in a short, you should write notes. You should take notes on why you got in. It's really going to help you understand the structure. Okay. So right here, I said I went short here because the swing trigger on a 1 hour chart was breached. I should have sold my shorts at the consequent encroachment of the 1 hour wick before the low was taken. Okay, so the low I'm talking about is here because remember, this is terminus. This is what I was holding to. That's why when I see price drop all like that, I'm not going to get mad because I didn't know it was going to do that. Me holding on to the short would have been absolutely gambling because I didn't know. All I knew was this move right here was setting up. I mean, I had a clue that price would come down to where it's going now. Actually, I took notes on here that said that price is probably going to try to go down to the opening price of a bullish order block. Actually, it depends on how this closes right here, but if price cannot close below this mean threshold, price is definitely going higher. This is order block theory, okay, mean threshold. But let me get back to the move that I was working on. Okay, so I should have got out here on my short. That's why I should have sold some of the position, maybe 50%, but then I had to deal with all this drawdown. This was scary right here. And it just sucked because this is a psychology game, man. Like, even though the structure showed me that price had to come down here to take out this low, I still was tripping like, well, maybe I'm wrong. Maybe I'm wrong. This happens, but you have to, and I have to do a call about this. You have to trade what you see, not what you think. I got that from Jessica Lane. Some powerful shit. Because I'm like, okay, well, what do I think? Oh, I'm wrong. It's reversing. I didn't see it right. But what do you see? Price closed below the swing low on a 1 hour chart. It took the low and it took it with force. That's what I saw. Okay, so what's supposed to happen after that? Price has to take this low according to the structure. Okay, that's what I see. But what do I think? Oh, well, price is going up right here. It looked like I'm wrong. It's probably going to come all the way back up here. And I may get stopped out, or I may have to sell my position because I don't want to sit through that drawdown. You see what I'm saying? You have to really know what you're seeing. So what I did was I'm like, okay, well, you want to play with me? As price is going up, I went in two more shorts right here. I got in even heavier because I know that price had to take out this low. So I went in short here and thought price would be just go down there and take the low. Then they wanted to come up again. I'm like, okay, I'm gonna hit you in the head again. Short. I went short again. So I think I had like 7 positions on. And so when price came back down here to consequent encroachment, because I thought maybe it'd come back down here to this consequent encroachment of the wick and then come back higher, I didn't want to sit through that. So out of the 7 positions, I sold 4 of them here. And then I seen this huge spike right here. And I was like, well, I'm glad I took something off because ICT teaches us to take something off. So right here, I was thinking like, okay, well, what the hell is going on? Because it spiked up. But, you know, I see it had to come back up to the order block since it took the low, it took the order block, the bearish order block. So it had to come back. So, you know, these are things you know these things, but when you're in a trade and you got money at risk, you like all that thinking goes out the door. So then price came down here. We had a nice, well, actually, no, I sold 90% right here. So I had 4 positions on here. Then I sold 2 of them right here. I still had 2 shorts on. And then price came back up here. I just went short. I was like, if price come up here, I'm just going to take the loss, you know. But I went 2 short, 2 positions here. I had 4 on. Because remember, target was down here. Terminus was down here. According to the structure, price had to take out this low. Do you understand that? It wasn't guessing. It wasn't hoping. It wasn't wishing. It was according to the structure. Okay? Which a lot of you people watching right now don't want to take time to understand. But you want it to work for you. But anyway, so right here I sold, accepted I was wrong. This is a bullish move I was in at first. I got in on this bullish move, very low leverage. So, you know, of course I was in drawdown. But yeah, so I sold right here at terminus. So I sold all the positions that I had. I had 4 positions on. Because remember, I had on 7 positions, and then when price came down here, the consequent encroachment of this wick on a 1-hour chart, and it was the same consequent encroachment on a 30-minute chart. So I had 7 positions on, sold 4 of them here, had 3 on. Price came up here. No, I sold 2 of them here, I believe. I wish I could see my executions not on a different device. Price came back up here. I put on 2 shorts. If price would have came up here, I just would have took a loss. I was like, man, I'll just take a loss. Fuck it. But it didn't. And then I sold everything as soon as this low was taken. Because remember, that was terminus. As soon as that low was taken, I sold everything. Okay. So this is a win review on Litecoin. Okay. On the weekends, I feel like people should be trading crypto, even if you're just doing it on demo, just to practice and understand the structure. Because remember, it's the same on all this stuff. It's not like the swing high and swing lows work on US 30, but it don't work on Litecoin or Bitcoin. It does. Okay. So here's the wick I was talking about. I'm just showing you this now with the annotations. Here's the wick I was talking about. So what I did was this is ICT. I put this is my Fibonacci. I have the regular Fibonacci on there. Then I have the standard deviations on there as well. So I broke this wick up into 4 sections because this stuff is mathematical. So this is consequent encroachment. I was telling you before. I should have sold something I think I sold something at 75% of the wick. So I like to take something off as price is going down. Yes, we know price had to take out this low. Okay. But you still want to take something off as price is going down, is the way I've been trained by ICT. Take something off the table. You just don't hold a big position to that low right there. Okay. Let me hide the annotations. Yeah, so this is a lesson in swing high and swing lows. I'm glad I saw this work. It was a lot of fun. Thanks for watching.